Good morning, everyone. Welcome to our Wednesday morning trading room. My name is Eric Senft. I'm going to be your host here for the next hour and a half, depending what the markets are doing. Well, I guess at least an hour and a half. That only takes us into the lunch hour. All right, so the markets just opened up, and I'll give you a really quick overview for those of you new to the DTS trading room. DTS is the diversified trading system, and it's diversified because we're looking at the market from three different points of view. Here in the top left, we have the Hawk Micro Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader, and the bottom right is the Raptor. Now the Raptor is the latest addition to the DTS family, and it actually incorporates elements of the other three tools all into one trading system. Regardless of the tool, all the signals develop the same way. First off, we're going to get a warning dot along with an audio alert, and the audio alert tells us that the trade parameters are starting to be met. When all the trade parameters are met, we get a triangle and a hash mark. That tells us it's decision time, and then we decide whether or not we're going to take the trade. Now, there's certain things that we look for. You're going to see that we don't necessarily take all the signals. For instance, here on the Hawk Scalper, we have signals that are coming off of yellow bars. Typically, we ignore yellow bar signals. Even though this one did have a little bit of follow through here, we don't usually trade yellow bars. There is one exception with the what we call the 4-arrow consolidation pattern, but we'll be getting into more of that later. There's also a few add-ons with some of these tools, which I'll point out to you as we go along. For instance, this Geiger Counter. The Geiger Counter is essentially a tape reader, and what it does is, it shows you the flow of the buy and the sell, the bid and the ask. The Geiger Counter is composed of three main components. First, there's the tape here, so you get a visual history of the time and sales. We also have this dial that's you see flipping around the Geiger Counter. And this shows us the current buying and selling that's going on. And typically what we're looking for is we're looking for this dial to pull over to one side and just stay there, maybe for 3 or 4 or 5 seconds. That shows us a lot of active buying or selling. And then there's this needle component, which you probably noticed turned green just a few minutes ago. And that shows us the immediate bias of this particular tool of the buying and selling. Now this, what I mean by a system add-on is that this tool will work on any chart. It doesn't have to be a DTS chart. You can use it on a 5-minute chart. You can use it on a tick chart. You can, any chart you want, any chart you can draw. Here on the Falcon Swing Trader, we have the Ultimate Support and Resistance Suite. This is another add-on, and it's an assortment of 21 support and resistance lines, forecast for today's trading. No, they are not pivot points. No, they are not Fibonacci levels. If they happen to coincide with one, it's more by coincidence than by design. And you can see that right now we're down here in this pink zone. So we're below the primary support line. The market is now technically bearish, and with a rather substantial opening gap this morning, that seems to make sense. So we're seeing a little bit of a reaction off of our support and resistance line. Things still relatively tight. Took a nice little bounce here, but we'll just kind of let it play out. I guess here on the Hawk we can take a look at what's been going on. So the market's closed around the 45.25 mark, it looks like. Relatively quiet through the Asian session, and then the European session opened, and the market floundered a little bit, but for the most part made a pretty decent move lower. And that's going to leave us with about a 20-point opening gap, as it looks like the market opened somewhere around the 45.05-ish mark. So big opening gap above the market. It's still very early. We'll see whether or not they try to get in there. This tool that you see here on the right-hand side, this is another add-on. This is the Trade Manager. This is a very important tool, perhaps the most important tool that you can have as a trader. There's two components. There's the risk component down here, which contains your risk on every single trade to, well, I have it set at 2% of my trading capital. You can increase that or decrease that. You can preset profit targets. Currently, I'm all in, all out. I just have one profit objective. But if I wanted, we could change that up and take half on target and leave half in as a runner. I can also preset as many as 3 targets. And then there's the Trade Manager component. And with this Trade Manager component, we have 16 different stop strategies to choose from. And they're all fully customizable. And these blue dots represent where our stop would be. So you can see what you would do is you would take a signal, say like this trend change signal right here, set your stop, and the Trade Manager will manage your stop for you. A lot of people very confused about how they should manage a trade once they're in it. They don't always have trouble getting into the trade, but they're not so sure what to do once they're in. Well, the Trade Manager can help you out with that considerably. So you're protecting yourself all the time, never letting yourself get overexposed, and you're managing your trade. What the Trade Manager also does is it frees you up to look for other opportunities. Now, the charts I'm looking at here are the NASDAQ. I'm also following gold and crude oil on my other monitor, but feel free to ask me to pull up a chart which you're following. If it's in my market mix, I will certainly do so. If there's Forex traders, or I do get a few of the stock market stocks. I can pull those up, or feel free to ask any questions as well. It certainly helps pass the time when the markets are moving a little bit slower. If we don't get a decent signal here shortly, I will take a trade just to show you how the Trade Manager works, how it automatically rolls your stops for you, and so on. But like I said, we're still a little bit early in the market, fairly quiet in spite of that rather substantial gap that we saw. Ranjit asks, with all the complexity of the various settings, how simple is it to use your software? Actually, that's a great question. Great pains were taken to make the software easy to use. With the Trade Manager, well, here, let's take a look at the hawk. We don't have a signal yet, but you can see we're getting a warning dot. This isn't one of our high probability signals. I'll show you in a moment what our high probability signals look like. But what we do is we set our prices, and so you can do everything right on the chart. So I'm going to set my entry down there. Let's say I'd like to put my stop loss up here. I automatically have my profit target. The trade manager automatically controls my risk. And again, I can preset all these things if I want a bigger profit target or whatnot. But here's the interesting point. Note the risk amount is $260. What if this is the thing that most people do, is they try to keep their stop really, really tight. Okay, I got a little rounding error. Okay, note my risk is $400, but I've got 5 contracts. What if I place my stop above this little swing high? Darn it, still getting a rounding error. I'm right on the cusp here. Let's see if I can get it just right. All right, well, you can see it's still around $400. But what has changed? Well, I went from 5 contracts to 3 contracts. What if I wanted to place my stop way up here? Oops. Well, see, Trade Manager won't allow me to do that trade because it's risking more than I can afford. All right, what if I want to put my stop way up here? The risk amount is still around $400, $350 to $400. But what has changed? Well, the quantity has changed again. The other thing that has changed are the probabilities. The probability of this trade working out is much higher than the probability of this trade working out. But the good news is that even if I took the trade this way, the amount that I would lose is never more than I can afford to lose. It's always contained, right? It's always 2%. Now, don't freak out about the amounts if that seems high or low to you. This is based on my capital. Rudolph is asking, what is a decent signal? Your chart shows a lot of up and down arrows. Yes, it does. And I know that confuses people sometimes when they first look at the DTS chart, but here, bear with me just a second. It's actually very straightforward. This is what we call a cheat sheet. And with the Hawk Scalper, for instance, these are the 5 primary signals that we're interested in. These are the highest probability signals. And you can see there's other signals that develop, but we don't necessarily take those because we're focused on the high probability signals. And they're easy to identify. I guarantee that before the end of this morning, you're going to be able to pick these out yourself. For instance, the first micro-macro cross signal. Very, very high probability signal. In fact, it's a signal that I take almost without exception. It occurs when the micro line, that's a thin one, crosses the macro line, and it's the first signal where everything is in sync. In other words, we have green bars, green trend lines, green filter, and a green signal. Pretty easy, right? Next high probability signal is the macro pullback signal. Again, it's easy to identify because everything stays in sync except the micro line. So the micro line is out of sync, but we have green bars, green filter, green macro line, and of course a green signal. The 4-arrow consolidation sometimes is a little bit more difficult to spot, but I'll point it out to you as well. It's not that difficult. It happens when the market starts to range. So a lot of times when the market first chooses a direction, it will range for a little bit, and typically it will produce 4 arrows before the next leg up or down, as the case may be. In crude oil, because crude oil tends to develop a little bit faster, we usually only get 3 signals. So what that means is if I'm trading a market like the NASDAQ or the Dow or the Russell or soybeans or whatever, once I get 3 signals and I have this little bit of sideways consolidation, I'm really focusing on getting that 4th signal because I know if the market's going to recover, it's going to do it on that 4th signal. Then we have the post 4-arrow consolidation. which speaks for itself. And then we have the red bar buy, or in a downtrend we would see a green bar sell. These tend to develop toward the end of a trend, and it's actually one of those signals that sometimes we'll take it with trend, but because we normally anticipate the trend to end, sometimes we'll take it counter trend. We'll look for the failure of it. And sometimes we'll just use it as an early warning that perhaps the trade might start to unwind, that the trend may be starting to end. With the Falcon, we also have our high probability signals. And you can see they're pretty basic, a trend change signal. And with the Falcon, we're always focused on the trend line color. So when the trend line goes from green to red, we're looking for this first signal, essentially, where everything is in sync. Normally the way the signal develops, and this one's moved a little bit further, but I had all three signals on one chart, so I snapped this one and used it for our cheat sheet. But normally the signal will develop a little bit earlier, but you get this characteristic down, up, down pattern. So you get the down, that changes the trend line color. Then you get the up, which is the buyers trying to fight the market back. And then you come back with the down and the signal. So your trend line is red, your bars are red, your filter is red, and of course your signal is red. That is a high probability sell signal. And then we also have the late filter entry signal, which means that the filter goes out of sync and comes back into sync. But the trend line itself never changes color. Very important. This is also a very high probability signal. And last but not least, we just have your typical trend line touch signal, where the market retreats into the trend line, bounces out, comes out with the signal, and we normally anticipate some follow through from there. All right, so so those are your high probability signals for the Hawk and the Falcon. Yes, there are high probability signals for the Eagle and the Raptor. I haven't printed those out yet, but we do go over those every day in the trading room. So right now, Rudolph, to answer your question, you see, we don't really have a high probability signal going on. We did get the first micro-macro cross signal back here. And yes, we took a little bit of heat, but it actually developed into a macro pullback signal at the same time. And then shortly after that, we had a 4-arrow consolidation. So these three signals kind of overlapped each other before the market finally took off. Here we have another macro pullback signal. Now typically we only get 2 macro pullback signals within a trend. If the trend is really strong, sometimes we'll get 3. And now we're working on a possible green bar sell. And all that means is we're going to produce a green bar, and it's going to have a sell signal attached. See, we've got a red warning dot. And as I mentioned, these tend to develop near the end of the trend. And what I might end up doing, because of this gap, if we get the green bar sell, I'll actually look to buy the failure. Rudolph is asking, is the trade signal automatic or discretionary? No, it's all automatic. The discretionary part is your part, whether or not you're going to enter the trade, where you're going to place your stops. Like for instance, let's say you get this first micro-macro cross. We don't have a lot of structure here, right? So you might say, well, okay, I'll take the signal, I'm going to take it below the low, and I'm going to place my stop up here. So that's your trade. Market comes in, and you hit your profit target. Next signal is your 4-arrow consolidation, which prints right here. you may say, see, the hash mark is a suggested entry. You don't need to enter on the hash mark. You might say, well, for 3 ticks, I'll enter below that low, and I'll cover above this swing high. So the market brings you in and hits your profit target. So that's the discretionary part. The signals themselves, there is a lot more to the signal than what you see printed here on the chart. The programmers took great pains to make the chart simple and yet attractive. But in actual fact, there's about a half a dozen things, algorithms running here in the background that have to be in sync before you even print a warning dot. Absolutely, Rudolph. I will show you a Raptor signal. And Jose, you're asking for a crude oil chart. I will bring that up in just a second. All right, so the Raptor, as I mentioned, is a combination of the other 3 trading tools and incorporates elements of the Hawk Scalper, Falcon Swing Trader, and the Eagle Trend Trader all into one chart. You probably noticed the band here. That's we borrowed that from the Eagle. The bar colors are coming from the Hawk. Some of the signal generation is from the Falcon. The whole Eagle Trend Trader is programmed into the filter down here. With the Raptor, we're running a double cloud. And no, these are not Ichimoku clouds. Yes, I know they look like them, but no, they're not. All right, so Rudolph is asking, can I see a Raptor signal? All right, well, we have, well, why don't I do the cloud crossover signal? This one is pretty clean. Normally the cloud crossover occurs a little bit sooner. When the cloud crossover occurs, which is when we go from a downtrend to an uptrend, we typically expect the market to retreat into the cloud and then for the cloud to offer some sort of support. So this would be our buy signal. And you can see that had some fairly decent follow through to it. We also get what we call a soft edge sell. This would be a soft edge sell. The alternative would be a soft edge buy. These tend to develop near the end of a trend. So because it's a counter trend signal, first we have to have a trend. From there, we get a failure signal. So we get what we refer to as a test of the extreme and a failure. All right, so we've got a test of the extreme. Here is the counter trend signal. So typically we expect it to retrace at least to the hard edge. However, very often when it produces this close, we get a little bit more follow through. And there you go. Took a little extra heat on it. Again, that's why we don't keep our stops ultra close. I don't believe in strangling trades. I think a lot of people do themselves an injustice by running their stops too tight. But there's typically 2 high probability signals from the Raptor. So here is a cloud crossover now this morning. Well, it happened in the wee hours during the European session. And now we're just kind of hanging out. Not much going on. We may get a soft edge buy signal, but not much really going on just yet. We do have a buy signal here, however, I don't see a decent test of the low before we look to buy that. We'll see if it comes down here, fails and heads higher and produces a soft edge buy, I'll definitely buy that. regarding your earlier question about whether the signals are discretionary or automatic, the other DTS birds are locked. You cannot change anything on them except for the brick size. You can change the size of the bar that paints. The Raptor, however, is more customizable. You can change the cloud sizes, you can adjust your filter, you can adjust settings on the tool itself. In fact, the Raptor owners, well, the DTS owners have a forum also, but the Raptor owners have a forum where they share their ideas, their tweaks and signals that they're fond of and the way that they're using their tools. So there's a whole community besides the trading room available to DTS owners. Okay, Jose was asking for a crude oil chart. All right, so here's July crude on the Hawk. And we had a first micro-macro cross signal here about 15-20 minutes after crude oil opened this morning. And again, it's the first signal where everything is in sync, right? The micro line crosses the macro line. Everything comes in sync. Red bars, red trend lines, red filter. That is a high probability signal. That's a signal you can take with a great deal of confidence. So we have one right here. We had another one right here around the London Open, or just prior to the London Open. Here we had a 4-arrow consolidation. It actually, remember with crude, I tell you that it usually fires after the third. Well, there it went, off the third arrow. You can see here why we don't typically take yellow bar signals, because they're very neutral. Yellow bars by definition are neutral. So sometimes they'll follow through, but typically if the bars go yellow, I tend to ignore them. Oh, here's a green bar sell. I was hoping I'd get a green bar sell to show you. So here is the market. The bars have turned green, but we produce a sell signal. And you can see there's a green bar sell. This also, by the way, happened to be a 4-arrow consolidation. The 4-arrow consolidation, or if you choose to start counting your consolidation at this point, is the only signal I will take on a yellow bar with the Hawk. It's that strong of a signal. Here's another first micro-macro cross. Yes, this one developed a little bit late. The market must have been moving a little extra fast. Typically, these first micro-macro crosses develop shortly after the market crosses over. In fact, you see this bar right here that has this little bit of a wick to it. It was trying to produce a first micro-macro cross here, but the market became overwhelmed and produced the signal there. So you can see by sticking with the high probability signals, you can get some pretty decent trades. No, you're not going to catch all the trades, but I think it's more important to find a signal that you can take with a great deal of confidence. It's like Ray Burke always used to say, you know, anybody can trade the left side of the chart. Trading the right side of the chart, not so easy. Okay. I'm going to show you the rest of the crude oil chart, but we're getting that test of the low, and I'm looking to see whether or not we're going to get the signal higher here, whether we're going to get that soft edge buy. I would love to buy into that. Come on. This trade tool that you see here is slightly different than the Trade Manager. This is called the Trailblazer. The Trailblazer is the same as the Trade Manager in that you've still got 16 different stop strategies, but you're going to notice the risk component has been removed. This is a one-click entry system, and there's the signal. So the signal printed, we got a little bit of a slip here, but that's all right. I'm going to get a stop in play. The Trailblazer was developed because we had some owners who were trading some very fast markets. They were trading some of the stock markets, some of the indices that were moving a little bit fast. And they said, can you give me a system that's a one-click system? Well, that was how the Trailblazer came about. And what you do is you preset your quantities up here. So I've got one contract in at 20 ticks for my target. The second one in as a runner, so it does not have a target. And we'll see whether or not they're going to hold here or whether they're going to try to stop me out. Come on, you buyers, where'd you go? This is the problem with the counter trend signal, of course. Ooh, I'm not liking that. No, they're going to tag me here in a sec. Darn it. Oh well, it was worth a try. It was a soft edge buy signal. Just didn't get the follow through I was looking for. That's not to say they're not going to try to head up there. So you just got to see something that no other trading room moderator will show you. A losing trade, yes, as good as the signals are, as high probability as the signals are, they are not 100%. You can see we've got a very tight little trading range going on here today. Okay, so let me bring over crude oil now here. I'll show you on the Falcon. I'll show you on the other tools. And again, I've got the support and resistance lines on here. That's an add-on. So you can see crude very much in a downtrend. We got a trend change signal here to the upside on the swing trader. This happened yesterday morning, so a nice little swing to the upside. Got an early trend change signal here. Got the proper trend change signal right here. And again, this is not typical. Usually the signals develop a little bit sooner after the trend line changes color, like this one does. This is typically how it works. This one we had the early trend change signal here, and then we had the proper trend change signal right there. But regardless, we had some decent follow through. Let's see if I can find you a late filter entry signal. Have we got one? No, not yet. So the late filter entry signal, again, it occurs when the filter goes out of sync, comes back into sync, but the trend line cannot change color. The trend line changed color through here, which is unfortunate. So we're producing a trend change signal now with the Falcon. It produced a little bit of ways from the trend line, so what that means is we typically expect the market to retrace into the trend line. So I would need to run my stop a little bit deeper. So my signal produced right here. Ideally, I'd like to run my stop up here, but I know that with crude oil, I can't afford that. So I either increase my risk amount or I try to run the trade with a tighter stop, maybe here to the crest on the trend line. No, darn it, can't afford that either. What about this swing low? Oh, shoot, I can get that one going, but that's a very tight trade as far as crude oil goes. I might see if I can't get a better opportunity on the Hawk, or maybe even on the Eagle, where I can structure the trade perhaps with a slightly wider stop. All right, here now is the Eagle on crude oil. Got our trend change signal right here, and nice progression lower so far. Just for kicks, let's see what that's worth. So let's say we entered here, and let's say we covered above the hard edge. Well, there you go. There's almost $1,000 move right there in crude oil. Nice hard edge bounce with crude oil, or pardon me, with the Eagle. We typically expect the market to give us a reaction whenever it encounters the hard edge of the trading band. So when prices, like right now we're in a downtrend, if prices retreat here into the hard edge, I would anticipate a sell signal, and that would tend to be a high probability sell signal. Oh, thanks, Jim. Jim's watching the advanced decline. He says the advanced decline started at 780 and then now it's up to 1,000 on the buy and just under 1,800 on the sell. All right, let's put that away. Let's get back here. Oh, see, my stop was just a little bit too tight. We came back with another soft edge buy signal. This one had the follow through on it. Darn it. Okay, so there's a soft edge buy signal on the Raptor. And actually, right now, the Raptor is the only one that produced the signal. The Hawk, it just went screaming past the signal here. You can see it tried to produce a couple times to produce a first micro-macro cross. We're getting the first micro-macro cross right up here now. So Jose's asking, so which system is the best? Well, there is no best. It's different. I guess it depends on your needs as a trader as well as your personality as a trader. The DTS birds give you more flexibility in terms of trades because you have 3 tools for 3 different market environments, right? You've probably all encountered the problem where your trade signal works great one day and then the next day it doesn't work at all. Oops, sorry. Speaking of which, I was going to show you this first micro-macro cross. I was going to suggest you probably try to run it a little bit deeper because there's very little structure here. So what the DTS system does is it gets around that problem by giving you 3 different tools. So you have a tool to take advantage of the market when it's just in scalp mode, when you're not getting any follow through. You have a tool to take advantage of the market on swing signals, and you have a tool to take advantage of the market on trend signals. The Raptor is a blend of those, and the Raptor was primarily developed because we had owners trading off of laptops. And they said, can you give me a one-screen system? We had a few owners who were just used to trading one screen as well. And so that's how the Raptor came about, actually. The Raptor tends to sacrifice quantity of trades for quality of trades, although you wouldn't know it this morning, as the Raptor was the one that produced the soft edge buy signal, and the other DTS birds kind of got hung out a little bit. As I said, we are producing the first micro-macro cross here on the Hawk, but given how quickly we came up, it seems very likely that we're going to see the market trying to get back here to the macro line where we're probably going to produce a macro pullback signal. Ranjit's asking, do you have any customers in the UK? Yes, sir, we certainly do. Actually, we got customers around the world. There's quite a few DTS owners actually in Europe and the UK. A lot of them use the DTS system to trade Forex. Forex market's not my market of choice. I never got over the wicked spreads that the brokerages charge, but hey, that's me. All right, so now we've had that big rally up. It looks as though the buyer's in control. What I'm going to do is I'm going to show you this signal here. We're going to pretend that it was the first micro-macro cross. I just want to show you how the trade manager manages your trade. We'll see if we get engaged here. What I'll do is I'll delete the profit target and see if we can't get the market to run out a little bit. Kind of near the top end of the trading range. All that buying has dried up. Okay, so I'm going to delete my break even and my profit objective. And we're going to give them a little bit of room here to start. And hopefully the market will advance a little bit, and I can show you how the trade manager actually rolls the stops for you automatically. But like I said, I suspect we're going to see a little bit of a macro pullback signal develop here first. Yeah, Ranjit says, my trading needs are very simple. I'd like a system that would guide me into entering a trade with a good chance of getting in and out of it with a profit, make a few ticks, and then shut down. Maybe 5 to 10 ticks daily. The DTS system is certainly capable of that. Like I said, we tend to focus on the high probability signals, so things like the first micro-macro cross. In fact, like I said, you could probably make a living just trading first micro-macro cross signals on the hawk. They're very high probability signals. So all I'm doing here is I'm highlighting the first micro-macro cross signals for you so that you can see, you know, they tend to be very good, very high probability signals. A signal that you can take with a great deal of confidence. So even though I have this signal here, well, we're taking it a little bit late, but here's our first micro-macro cross signal. I can tell you with a reasonable amount of certainty that, you know, about 80% of the time the market will continue higher from here, at least high enough to hit our high probability profit target, which I have deleted. Sure. Jose is asking, can you show crude oil real time so I can compare it with what I'm doing? Of course. Ranjit's asking, so this works with NinjaTrader? Yes, it is specific to NinjaTrader. We are working on getting it cross-platform. The problem is this programming is actually very sophisticated, and NinjaTrader was the only software capable of managing the programming. So we're working on a macro pullback signal here now with crude oil. I've got the warning dot. I know that if the signal prints, it's going to print right there. Can I afford it? Doggone it. Crude oil is so expensive. Let me dial up the risk here a little bit. Can I risk it there? All right. So here's a possible scalp signal coming on crude oil. Crude oil, again, with this huge monster decline for the last 18 hours, more or less. So we've got the warning dot. Don't have the triangle hash mark yet, but I can anticipate where it will print. I know that if this bar finishes on the low, that it will produce a triangle hash mark sell signal, and that will be our macro pullback signal. All right, so the market retreating a little bit, I'll adjust the signal. We'll risk it to the crest in the macro line here. Don't have a signal on the Falcon yet for crude oil. We are working on a possible trend change signal. You see how the trend line is starting to change color? So that, again, alerts you a little bit that maybe something's going to be going on in crude oil to the buy side. Here's crude oil on the Eagle. Still very bearish. Remember, I mentioned if it gets into the hard edge, I would anticipate a sell signal to develop. So we'll see. We'll see what comes from that. All right, so now we're into yellow bars. That nixes our sell attempt on crude oil. Oh, fantastic. Ranjit's already got his Ninja license for his software. Well, that's great. Yeah, you're already all set up. Okay, we'll stay with crude oil for a little bit here. Everybody seems to be on the slow side except for that monster rally that we just saw in the NQ. Just checking your questions, make sure I haven't missed anybody. All right, well, crude oil kind of dead here at the moment. I would anticipate it might get up here a little bit. We may get a green bar sell signal, which would be a worthwhile sell attempt. Why? Well, it's not the probability of the signal itself, because a green bar sell signal, as I mentioned, tends to develop near the end of the trend. However, we haven't had a test of the low, have we? Typically, the market owes us a retest before the failure. It's one nice thing about these mean Renko bars that come standard with the DTS system is that it gives you a very clear visual of who is controlling the market. You can plainly see where support is. You can plainly see when support or resistance is in. See here, we have the retest of the high. So we had the macro pullback signal, the retest of the high, the failure. As soon as the market started heading lower, we knew this market was going to unwind and head lower. And you can do that time and again. You can go through your charts and you will find that every time the market makes a reversal, there's that retest and then the failure. See, here's the green bar sell, but having seen the retest before, you could have set up to buy a breakout above the green bar sell signal, which is right here. Compare this with what we're looking at here now. If we get a green bar sell, it might be worth selling because we haven't had a retest of the low. just stay with the crude oil market here a little bit on the hawk, and I'll throw the falcon in there so you can see the falcon building. See here on the falcon, we're starting to produce this trend change signal. Now we did it here and we did it here, so the buyer's obviously starting to dig in a little bit. They're definitely trying to get stronger. But neither here nor here did the signal complete, did it? You can also see how the legs of each move are getting shorter. Right? We had the big move there. We have this move here. We have this move here. If this next one, starts to go sideways like this, and then we come back, produce our buy signal, well, then we're good to go. It would be worth attempting a buy. Nice little bounce off of the secondary support as well. Great bounce right here off of the median line. Typically these three lines, the primary resistance, the median line, and the primary support, they tend to set the tone for the day. If you get a break of the primary support or the primary resistance, we typically expect the market to move two zones. So that helps sometimes if you're trying to figure out where your profit target should be. So when we break the primary support, we have a pretty good idea that the market's going to try to head down here to the 47.79 line, which is precisely where they went. You can see here yesterday, after they broke primary support, they actually ended up going three zones. There's one, there's two, there's three. Crude in a relatively tight little trading range here at the moment. Thanks, Jim. Jim says the advanced decline a little bit stronger again for the buyers. 1,100 on the buy, just under 1,700 on the sell. He says that Jim's watching the mini Dow, that we're retesting the morning high, which we are. So the opening range high, so the market broke, retesting, might get the cloud crossover signal here out of the mini Dow. See, the mini Dow also gave us the soft edge buy signal here after the retest of the low. Good progression higher. With the Raptor as well, we look for hard edge bounces. So the market comes into the hard edge, bounces, comes out, produces a signal. You could have also considered this your cloud crossover signal if you wanted. I wouldn't argue with you on that. Some of you may have been a little bit more aggressive and jumped on this one as your cloud crossover, because as you can see, you've had your retest of the high. Actually, you had two retests. You had that one, and then you had this one. Geiger counter is getting stronger. See how the dial pulled over there and held? See, it holds. Oops, that wasn't very long. We want it to hold for like 3 or 4 or maybe even 5 seconds. That shows us a lot of buying pressure. Just the buyers chewing through all those orders. Jim says, I hope so, because I'm long from the hard edge. Well, good luck, Jim. I'm sure we'll see at least one more press here toward the high. Ranjit's asking, Eric, do you personally host the trade room on a daily basis? Yes, I do. Every morning for the morning session. The afternoon, we leave it up to the individual to do their own trading. All right, so here comes now the green bar sell signal. You can see we're going to get that retest now also on the Falcon. I'll try to demo this one for you. Can I risk it above the high? Oh, whew. I hate how expensive crude oil is to trade. Now with the green bar sell, because it is a counter trend signal, you could also, or possibly a counter trend signal, actually I'll leave that trade in. You could also set up to buy the failure of it. Now the signal is not complete, so don't go throwing in a buy order above the high. But if the signal prints to the short side, you could also set up to buy the failure. Or you could just say, hey, it's an early warning that perhaps the trend might be changing over, which is also what we're looking at with the Falcon, right? Right, we're looking at the Falcon with a possible trend change. So with my hawk, I'm looking for a retest of the low. And because the green bar sell signal has a tendency to develop near the end of the trend, I'll probably just scalp out with profit. I was debating whether I should try to let it run out, but no, I think I'll just take the profit. Boy, crude oil is painful this morning. Jeepers, you guys. Normally crude oil is a lot more active than this. I guess traders waiting on tomorrow's inventory report. Nobody wants to get too committed. Yes, Ranjit, inventory is normally on Wednesdays. However, this week was a holiday in the U.S. and on those weeks, the holiday Monday, the Memorial Day holiday, the inventory gets shifted over to Thursday at 11 Pacific, or pardon me, Eastern. Oh, crude oil, you guys are killing me here. Come on. Yeah, Jim's watching the cloud to cloud for you Raptor traders, or those of you interested in the Raptor. Let me show you something that Jim likes to do with his Raptor. Now I'm going to, oh, actually I can show you on crude. Bear with me a sec here. The Raptor clouds are great for showing when the market is typically overbought or oversold. So here's crude oil now on the Raptor, and you can see how wide the clouds are. So Jim says we got 70 ticks from cloud to cloud, which is huge for crude oil. If we it would have been nice to see a little bit of a retest here of the low so that we have a proper soft edge buy, but you can see the Raptor starting to produce a buy signal. If you wanted to risk it below the low, there's a buy signal for you on the Raptor already. Here's that cloud crossover signal on the crude oil Raptor. You can see we had some nice follow through from that. Here is the soft edge sell signal on the Raptor. It was preceded by that test, that retest of the high, and then the failure. The soft edge buy or the soft edge sell must always be preceded by that retest. If you take it before then, well, it's not a high probability signal. Here's a nice little hard edge bounce. The market trades into the hard edge, bounces out, produces a signal. Some of our Raptor owners, that's all they look for, is a hard edge bounce signal. Market comes into the hard edge, it bounces out, produces a in sync signal. Another little hard edge bounce. Another hard edge bounce right here. So a few opportunities there. All right, so we'll put the crude oil Raptor away. So Jim was just making the comment, because the cloud is so wide, the market is really oversold. All right. Are they going to give me that retest? Here they come. Oh, so close. Pretty sure we're going to see crude trying to rally a little bit today. That's why I'm following this possible trend change signal that we're seeing here on the Falcon. Pretty sure we're going to see crude get into that hard edge on the Eagle. Come on. No, not yet. Well, there's that rally that we were waiting for, but we didn't get the green bar sell signal, so we can close that out. All right, I'm going to put crude oil back on the shelf. Let's get back here to our NASDAQ trade. Let's see how that's going on. I've totally ignored it. Okay, so here now with the NQ, we're still kind of nursing this trade. You can see the market came down. It gave us a red bar buy signal. I said we were going to get a macro pullback signal. Actually went a little bit deeper, gave us a red bar buy signal. This would have been a better signal to take than the one that I was simulating up here. Why? Well, because when we took this signal here, there's very little structure to the trade, right? This is why I was anticipating maybe the market would give us a macro pullback, because there's not a whole lot of structure here. So the market goes up a little bit, gives us a macro pullback signal, doesn't trip, then comes down here with a red bar buy signal. Well, now we got a little bit more structure. This signal cannot fail until the market retests the high. So that's what would have made this a very nice little buy. So the market rallies up from here, comes back down, and starts to rally up again. Okay, at this point, I can start to become more aggressive with my stop. So I wanted to show you how the trade manager would roll my stops, but I can see we're kind of flinching on these highs. So what I'll do is what the heck. I'm going to turn the trade manager on, and you see these blue dots now? Those are going to be my stop strategy. Watch what happens as soon as I click accept. There we go. So now the trade manager is going to manage my trade according to these stops. Now, just for your information, I would rather have my stop below this low, but we'll see how the trade manager does. Whether or not we can break out above this high. If we can get somebody to take 45.23, we should start to see the sellers fold. We had some pretty active selling around this 45.23 mark. If we can get the buyers to start buying 45.23, we're going to see the sellers exit their position, and we might get a little bit of a run up here, maybe even a challenge of yesterday's highs, which were, what, around 45.28-ish? Oh, come on, don't fail here. We're getting a fair amount of volume on this bar. You may have noticed that the width of these bars change. That's because I'm also using the Indicator Warehouse Dynamic Equivolume bars. This is also a system add-on. It will work on any chart. The nice thing about the Dynamic Equivolume bars is that unlike regular Equivolume bars that only work on candlestick charts, the Dynamic Equivolume bars will work on any chart style, including the mean Renko bars, regular Renko bars, tick bars, whatever. All right, so you can see how the trade manager is rolling my stops for me automatically. And if I had a break-even trigger, I think we might have hit it by now, but we'll see. We'll see if we can't get a little bit more buying through here. Typically, when the market breaks out of a proven resistance area, a proven swing point, we should anticipate that the market's going to do one of these. It's going to try to go up, it's going to come back, and it's going to retest. So once we get that retest, then we're looking for the market to recover the trend, recover that breakout. So you'll want to manage your stops accordingly. See, sometimes half the challenge in trading is just keeping your stop out of harm's way. Just keep your stop back far enough that the market actually has a chance to get to your profit objective. So we'll let this play out. Oh, you can also force your trade to break even. I've deleted the break even trigger, but if you were panicking about the trade, you could always hit the break even button. That would force your trade to go to break even. In this case, I have it set at break even +1, but you can set it, whatever you want, +5 or 10 or 20. You can even set a negative break even. Typically, though, we want to make sure the broker gets paid, because we all know we just do this to make sure that the brokers can afford the payments on their BMWs. Good question, Ranjit. Ranjit's asking, is there such a thing as an average number of trades or ticks for an average trading week? Honestly, I've never tracked it. The markets change. You see, we've got this tool here in the top right corner, or pardon me, top left corner. This is another add-on. This is what we call the Day Ranger, and the Day Ranger's purpose is it shows you the current range compared to the 5, 10, and 30-day range. And you can see that as far as the 5-day range, we're currently above the 5-day range, but notice how the range has been contracting. Our 30-day range was 200 ticks, our 10-day range just over 150, and our 5-day range around 92. So that tells us that the market is actually starting to contract. All right, well, why should you care? Well, when the market is contracting, we may choose to go all in, all out on our trades, right? Had I gone all in, all out on this trade that you saw, I would have got my profit target. If the market is expanding and the ranges are getting bigger, you may choose to put a runner in or perhaps take partial profits on target. The other thing the Day Ranger will help you do is help you determine profit targets and maybe stop losses. So for instance, we know that the market is contracting a little bit. Our typical range seems that it should be around 100, anywhere from 100 to maybe 150 ticks. So let's say you're going to say, well, I'll take 10% of that as a profit target, or maybe 20% as a profit target. So that means you're going to have a 30-tick target. So let's say we did the a 30-tick target off of this red bar buy signal, and we'll just do a single. So we're going to take the signal, maybe run our stop here, and there you go. You got your 30 ticks. So you've got 20% of the daily range on that move. Likewise, you could say, well, I'm going to run, say, 20% of the daily range as a stop loss, in which case you would run a 20-tick stop loss, and you could use your fixed tick strategy and maybe set, 20 ticks off of the low, whatever the case may be. Oop, it's on the wrong side, so we throw a minus sign in front of that. So now you're running a stop loss 20 ticks. If we were to take a signal here, this is not a signal, but if we were, that's where our stop would be, and that would be 20% of the daily range that we allow for a stop loss. Or pardon me, that's not 20%. 20% would be a 30-tick stop. So we're going to run a 30-tick stop that off of the low. That would be our offering 20% of the daily range as a stop loss. So that's another way that you can use the Day Ranger. So as far as an average number of ticks, I guess it depends on the market, right? If the market's expanding, you can take more ticks. If the market's contracting, you'll get fewer. But typically on the Hawk, our high probability profit target is $50 per trade. And if you stick with the high probability signals, well, let's just do it this morning. So we'll focus on the first micro-macro cross. Now, I've already explained to you why we would need a deeper stop here. So this one hit its high probability target. So there's 50, and we'll just assume we're trading singles. So there's 1, there's 2, there's 3. Okay, we'll just do it for today. We'll say that, well, Ranjit, you're in Europe, so This would be native to your time zone. London Open, first micro macro cross if you're following the NASDAQ. I'll pull up the British pound here for you as well. And so there's one, there's two, there's three signals just on the first micro macro cross. On single contracts, that would be $150. If you're able to trade multiple contracts, say 2 contracts, well, that would be $300 for you. And that's just off one signal, off one tool. Mo's asking about oil inventory. No, Mo, Memorial Day long weekend on Monday, remember? So the crude oil inventory shifts over to Thursday. It's going to be Thursday morning. So here is the British pound on the hawk. Ooh, it's a little bit more wild, isn't it? All right, well, we had a first micro macro cross here, took a little bit of heat, got a 4-arrow consolidation pattern at the same time. So that went down. Here's a green bar sell. That went down. Here's a green bar sell that did not trip. Here's a red bar buy that failed, and that went down. Here's another first micro macro cross. Now this one gave you a little bit of heat. Thank goodness the pound is a slightly more affordable vehicle. So here's your first micro macro cross signal. High probability signal. But you don't want to strangle the trade. Why? Well, because the market may do one of those. It may back up on you a little bit before heading lower. You don't want to stop yourself out before the trade has a chance. So ideally, you look for a little bit of structure. At the very least, use the crest and the macro line. Ideally, a previous swing high or low. Now, sometimes what I do if I only have a single contract is I'll try to run the trade out. I may actually delete the profit objective. And when the trade starts to move in my favor like this, I'm going to reduce my risk. I'm going to start bringing my stops in case the market bounces. And there we go, we hit our profit target anyway. But even had the market reversed here, it looks like I would have got tagged for maybe $60 or $70. So there's the British pound on the hawk. I'll bring the falcon over here in a second. There's the falcon. And you can tell this market is sideways. You can tell it's choppy. Just look at it. It's like a roller coaster, the trend line. It's not going anywhere. And we're just hovering below the primary support line. Our filter is all broken up. It'd be interesting to watch the British pound. When is the, Ranjit, when's the vote for the British exit from the European Union? Is that end of May? But you can see that like the British pound is just crazy here on the falcon, waffling back and forth. No real clean signal. And now here on the Eagle. The Eagle Trend Trader, a little bit better. You see, we come into this hard edge. Remember, I told you we expect a reaction. So here's a green bar sell. This is actually a high probability signal on the Eagle. It's not a high probability on the hawk, but on the Eagle, we encounter the hard edge. We've got a green bar with a sell signal. That is a high probability signal. If it were in an uptrend, it would be a red bar with a buy signal. But we're in a downtrend. You can see green bar sell, good follow through. Green bar sell, good follow through. Green bar sell, follow through. So that's a signal that you can take with a great deal of confidence. Oh, Ranjit says the vote is June 23rd. Oh, Pierre says also June 23rd. Yeah, it'll be interesting to see what comes of that. Well, not a very active trading day today, unfortunately, but I was able to show you guys a few things anyhow. Might get a failure signal here. On the Eagle, we have a signal that we refer to as the rule of three. And all that means is you get three counter trend signals, and that kind of happens in advance of the market changing trend. So right now, technically, our trend is bullish, but we've produced 1, 2 signals against the bullish trend. If we come back with a third signal here, especially if we've retested the high and failed, that could be a decent sell signal. Here is a rule of three to the downside. Now technically we only got 2 signals, but all the structure is there. So here's that retest, and we have 2 signals contrary. Typically we would get 3. This signal through here probably tried to print, but didn't line up quite right. But that was still enough that, given the retest of the high and the failure, I would be interested in shorting, and I probably would have shorted this bar right here, right below that low. Why this one? Well, this is the one that flips the ATR over, so now I have a few more things in sync. Yeah, fantastic, Ranjit. Thanks for coming by. And there is a phone number at the website if you need to talk to anybody. Folks, if one thing that makes Indicator Warehouse different than other outfits is that you can actually talk to somebody. So you can always shoot Adam an email, or you can just phone. And Adam is going to be probably the guy you're going to be talking to. So here we're getting a with trend signal now. I thought maybe the market was going to unfold and reverse, but we're getting a chance at a second push on this signal. And all that means, the second push just means that we allow the signal to engage, and then we let the market retreat from there. And what that does is it shows us where the buyers and the sellers are really digging in. So what I would be looking for now is to buy this on some renewed momentum. It's a tough place to buy, though, because the market is kind of at the top end of the trading range. All right, well, we'll just kind of let that simmer for a moment. Again, not the best looking signal. I would much rather see the failure. I would much rather see this market come down now and print a sell signal. I would be all over that. That would be a high probability signal. The one that we're looking at right now, not so much. All right, you guys, we're going to be closing up the trading room here in a few minutes. So if you have any questions, please type away. We'll wait a few minutes for those of you who are hunt and peck typists. Come on, knock it down. Like I said, the sell signal from here would be much higher probability. If we get this failure and a sell, I bet you we're getting a Yeah, we would get a corresponding soft edge sell here on the Raptor. And let's see, are we getting a trend change on the Falcon yet? No, not yet. Oh, we're actually getting another first micro macro cross here on the Hawk. So everything has gone out of sync. We're coming back into sync. We haven't printed the signal yet, just the warning dots. But the Hawk is, the scalping tool is saying, hey, Eric, you might be getting a scalp buy signal here if we see the market rally. Okay, no more questions? No? All right. Well, I think we're going to button up the room then. Thank you very much for your attendance today. I hope you found it a little bit helpful, or hopefully answered some of your questions about the DTS system. And DTS owners, I'm going to see you in the trading room again tomorrow morning. Otherwise, remember, we'll have an open house next Wednesday, so feel free to drop in, and we hope to see you guys then. All right. Bye for now.